Hey everyone, welcome back to your weekly market outlook. This is for the 29th of April 2024. Let's get this started with a quick preview of what's coming up this week, as well as a recap from last week. I think from last week, the major ones is definitely the Australian inflation number. This one here is a little bit sticky in terms of the 3-month CPI actually picked up from 0.8% to 1%. Quarterly CPI also picked up back to 1%, while the yearly CPI, the headline inflation number, kind of missed the consensus a little bit. Market was expecting a 3.4, we got a 3.5. So inflation, it's picking up again in Australia. And in terms of the RBA rate cuts, we're not expecting a rate cut, not at least until about November 2024. Then we have the US GDP numbers. The US GDP numbers, in terms of the growth rate, fell to 1.6%, but the index itself is actually still increasing. So overall, I think we have a little bit of a mixed number in terms of the GDP number, but I think the biggest driver is definitely the unemployment claims. The weekly unemployment claims continue to fall. Continuous claims has been falling, and for last week, the weekly unemployment claims basically fell from 212,000 to 207,000. And then we have the Bank of Japan basically doing nothing, and we can see the impact on the Japanese yen. Basically on Monday morning, if you were looking at the chart, it was one of the more volatile market conditions. In the past 3 days, the dollar Japanese yen has actually gained about 5 yen, or about 500 pips. So very, very significant in terms of the Japanese weakness here. And in addition to that, for this week, just to give a heads up, it's going to be Golden Week in Japan. So liquidity is going to dry up significantly, and whether or not the Ministry of Finance is actually going to intervene, as the Bank of Japan, as the Japanese yen, the dollar Japanese yen, has actually breached 160 this morning, is obviously yet to be seen. But again, just a quick reminder, Japan is having their Golden Week holiday, so it's basically the whole week. It's going to be a full week holiday. Not a lot of traders or trading activity happening in Japan, so liquidity is definitely going to dry up. So definitely something to consider as well. All right, let's take a look at what's in store for this week. We obviously have the inflation numbers coming out from Germany today, GDP growth rate, and the inflation numbers coming out from the Eurozone. That's going to be on Tuesday. And then we are starting to move on to the month of May. We have the ISM manufacturing PMI on Wednesday. We have the JOLTS job opening numbers as well on Wednesday. And we also have the ADP numbers. On Thursday, we have the ISM services PMI. On Friday, we have the ISM services PMI, as well as the NFP numbers and the unemployment rate, which is going to be the main focus for a lot of traders. We are expecting a little bit of an upside surprise, potentially a little bit of an upside surprise, counting the weekly unemployment claims that we have from the US. The NFP numbers, we are looking at a number above 200,000. Obviously, our market consensus is about 243,000. Last month's number, we're expecting a little bit of a potential revision because there was really a surprise to the upside there. But for the NFP numbers, we're looking at a gain above 200,000, which is going to be consistent with the lower unemployment claims that we've seen. And the unemployment rate, market consensus is at 3.8%. We might be expecting a little bit of a potential surprise. We could see the unemployment drop back down a little bit lower to 3.7%. So that's the data for this week. Definitely high impact data coming out. For this week, we have the inflation numbers coming up from the Eurozone. We have the GDP growth rate coming up from the Eurozone. If we take a look at the GDP growth rate, we do expect the GDP growth rate to kind of slow down a little bit from 0.2% to 0.1%. But overall, I think the main focus is definitely going to be on the NFP numbers. And not to forget that on Thursday, we do have the Fed interest rate decision. Now, we expect Fed to not do anything. We're not expecting a rate cut, definitely not expecting a rate cut. We're also not expecting a rate hike as well. However, in terms of the language presented during this monetary policy meeting, we do expect a potential shift in terms of the possibility for rate cuts in 2024 to be reduced. So just keep that in mind. That's going to be on Wednesday in the US. It's going to be Thursday if you're in Australia and Asia, basically early morning. All right. Let's take a look at the Aussie USD. Aussie USD has basically maintained its range-bound market condition as per our outlook. Basically, we do find support at 64 cents there. We do see buying demands basically at about 64 cents. In terms of ranges, we surpassed 65. We are now back at the upper resistance, basically at around 66 cents at this point in time. That's going to be the cap for the Aussie USD. We do have that fair value gap at 66 cents and basically 65.50 to 66 cents. We also have the Ichimoku cloud just right above that, around that area there. So it's going to be interesting if we do manage to surpass 66 cents, then we do expect a potential continuation to the upside for the Aussie USD here. And considering that the inflation is still remaining pretty high for the Aussie USD, I think global outlook for the Aussie is basically it's mimicking what the US economy is doing. Inflation is still sticky. So in terms of RBA cutting interest rate, I don't think that's going to be likely. And that's basically has been what's pushing the Aussie USD up a little bit. Now, next up to Euro USD, we do see a little bit of a potential recovery here. It's more of a retracement rather than anything else. And last week's outlook, we did mention that 1.0750 is likely going to be the resistance. And that's basically where the market has been capped. And for this week, going into this week, we still see 1.0750 as a potential resistance there. Beyond that, obviously, we have 1.08. But what's interesting is definitely the resistance trend line. We definitely want to see if price is able to test that resistance trend line and whether or not it actually fails. If it does fail at the resistance trend line, which is going to be at 1.0750, then we do expect more continued selling on the Euro USD here. The Pound USD has retraced a little bit as well. We are now back at 1.25, 1.2550 previous order block. And this is going to be another tough resistance for the Pound USD. We have seen the Euro USD and the Pound USD kind of manage to retrace a little bit. That's basically on the back of the weaker Japanese yen, because we saw significant gain on the Euro Yen. We saw significant gain on the Sterling Yen. That's basically helped lifted the Pound USD and Euro USD for that correction there. But versus the US dollar, both of this currency remains weak. And for the Pound USD, definitely want to watch out for 1.2550, whether or not price is actually able to surpass 1.2550. But even if it does manage to surpass 1.2550, we do have resistance at 1.26 and 1.27, and moving all the way up to 1.27 would still be considered a correction, not a trend reversal for the Pound USD. So this one here, the pressure remains on the Pound USD, depending on whether or not we actually fail at those key levels, 1.2550, 1.26, and 1.27. All right, this is the dollar Japanese yen, and we saw a very significant gain on the dollar Japanese yen. This is basically on the back on Friday's comment that Bank of Japan is not going to be doing anything. And in terms of price surpassing 155, 152, we didn't see any intervention coming up from the Ministry of Finance. So traders has basically take on this and speculate that we're not going to be looking at a potential intervention until about 160. The problem with that is this morning price actually breached 160, so it's actually still finding a little bit of resistance at 160, and this is more in terms of fear of intervention. That's why it's not exceeding 160. However, considering that this is Golden Week, there's also a potential where the Ministry of Finance might actually not be doing anything because it's kind of holiday for them. In extreme situation, if price continues to be speculated and price kind of spikes up above 160 today, then we are still giving out a warning that there's a high potential for an intervention from the Ministry of Finance in Japan. Obviously, market is testing where that line is. Is it going to be 160? Because previously market was testing 152 and 155, and right now they're testing whether 160 is actually going to be the level where an intervention is actually going to happen. But from a fundamental perspective, there's nothing wrong with the movement of the dollar Japanese, and this is fundamentally back. This is fundamentally correct. And in terms of whether or not the intervention is actually going to work out or is it going to be effective, the answer is it's not going to be effective. An intervention from the Ministry of Finance in Japan would cause an immediate 5 to 7 yen, or about 5 to 700 pips of a drop on the dollar Japanese yen. That's when you know that the intervention is going to happen. However, looking at the demand for the dollar Japanese yen, looking at the interest rate differentials between the US and Japan, and we are expecting, if there is an intervention, the market would drop significantly to the downside for about 5 to 7 yen there. And we expect buyers to actually come in and pick it up, because considering where price is 160, if you take away about 5 to 7 yen, that's basically just putting it back down to about 155, 152 at best. And I think there's a lot of traders just ready to pick it up again at those levels, because previously we know an intervention, for it to be successful, it needs to be backed by a good fundamental as well. Just considering this current situation, the fundamentals is correct. The US dollar is just stronger in terms of the expectation for no rate cut, or maybe just one rate cut from the Fed. Fundamentally, this is correct. So an intervention wouldn't work in the long run. It might cause a little bit of a short-term unwinding, but those are going to be quickly picked up by a lot of traders, a lot of carry traders. This is more of a buy on a dip scenario. Just a little bit of a warning here. Any yen crosses is considered to be a high volatility currency, especially this week. So just keep that in mind if you're trading anything yen crosses related. All right, finally we have gold. And for gold, last week we talked about a symmetrical triangle, and either side it breaks, that's basically going to be the direction for gold. And for gold here, we have seen a sustained position below 2350 on gold here, and since we are expecting a potential of a hawkish coming out from the FOMC this week, we tend to view the gold here to be more of a drift to the downside. Right now it is sustainable between range at 2300 to 2350, and again 2300 is going to be the support level. If we breach 2300, then yeah, we do expect a little bit of a stronger correction to the downside, potentially about 2250 to 2200. That's basically kind of the limits to how far gold could correct. All right, so with that, good luck to your trades this week, and I'll see you soon.